hold on option segment, especially index options, which constitute lion's share in the overall market turnover. His grip on derivative data enabled him to foresee near-term market movement, and for this very reason, we are conducting this webinar. He will be supported by Mr. Gaurav Arora. Gaurav has recently joined Religare, and in no time, he has been our key resource to generate short-term investment ideas. BTech by qualification, Gaurav has a good understanding of chart, and his ability to understand data has been contributing significantly toward wealth creation for our clients. Gaurav focuses on the stock feature and stock option side of the derivative segment for Religare. With this note, I would like to request and hand over my mic to Mr. Manoj to start the session. Manoj, over to you.
Thank you, Suraj. Good afternoon, everyone, and a warm welcome to this monthly webinar that we have on the day after the day of expiry. Now, before we go ahead, generally this webinar happens in three parts. First is basically we discuss what the previous month had in store, what the repercussion or the implications might be into this series, and how do we trade this series, and what might be the view that we have. So September was a positive month, at least in the first half. If you remember, it was the banking stocks and the bank Nifty which was trending and which was supporting the Nifty in a very bullish way, and the surge was almost till 18,100 on the Nifty. And eventually, in the last 8 to 10 days, if you see, thanks to the global cues, the market started correcting, and the expiry was almost 4% down from the previous expiry. So we were somewhere close to at least a 16,800 to 850. And yes, the banking, along with the other sectors, were the one where there was a lot of profit booking. So we try to see the last 5 days of expiry, what exactly is where the positions have been taken into the next series, which is October. And based on that, we try and analyze where the next fortnight or at least the 20 days of the coming October series might be. So I hope everyone can see the screen wherein we have a small presentation which simply says as to how exactly would be the data which is panned out and how we're expecting things to happen. So this is the same way we look into more of objective analysis. We try to use the option data. We try to look into the FI's nature of trade, which would depict some sentiment happening in the industry, and then the overall parameters like the volume and the call ratio, which actually helps us depict where the index might be trading. So first thing, we simply objectively see what the positions all the traders, the net traders in the market had for the month of September when it started as a series, and what we have in October. So the consensus or the understanding here is the more you have the position, the more is the hedge ratio or the nervousness for the portfolio that you carry. So there is a norm which goes into the market that your entire derivative position, that is your stock future that you have for the current month, there is a ratio between that to the Nifty futures for that same month which is being carried. So that is simply said as a hedge ratio. So to understand that, we try to use this data. So September started with 1 crore 6 lakhs as September futures when it started. And now today, the first day of October series, when we started this morning, the position in the Nifty were a good 114 lakhs, almost 1.14 crores. So what it simply says that the last 10 days of correction which has happened in the market, the major positions from the September series to the October series was as a short roll. What exactly you mean by short roll is where the traders, especially FIs, they short the October Nifty futures against the portfolio or the stocks that they carry from September to October. So as they roll their position from September futures to October futures, they also short the Nifty future, which acts as a hedge. Needless to say, Nifty is a very liquid index, and that is exactly why that is selected. Even if the entire portfolio comes into the derivative segment, that's a good 150, 180 odd stocks. Now, the same goes with the banking stocks as well. Now, Bank Nifty is the second most, I would say the tradable index, at least on the future side, which happens and which gives a good return. So we have seen short positions both into the Nifty and Bank Nifty. Now, how do we understand or what do we take from this data is we feel that 17,350, so let's say around 17,400, that is a weighted average price at which this 1 crore 14 lakhs of positions has been rolled from September to October. So what it says that if the Nifty goes beyond the 17,400, we can term that or qualify that a bottom might have been made and now the October might be on a positive trajectory. So just to add a couple of lines, today the market showed good resilience. There was sharp bounce after the policy as well, and the Nifty almost bounced 50 odd points, thanks to the Bank Nifty also, which contributed to almost 1,100 odd points. Now, if you see 17,200 roughly is where the Nifty almost made the high. So we believe that we still have 200 odd points before we can say that October might be a bottom has been made and there is a possibility for the Nifty to inch higher. So as of now, because we have huge positions close to 1 crore 14 lakhs as short at 17,400, the view here is the hedged position is at sell on rise at 17,400. Now, on the downside, 16,700 to 16,800, I guess there is multiple times the Nifty has tried in the last 3 days, precisely from Tuesday, second half. If you see the bottom is more or less plus of 50, 80 odd points from those levels. So we believe that might be the support because there is some put writing, at least with respect to the call that we have seen at 16,800 to 17,000. So first thing first, huge positions which is short is being carried from September to October, saying that October is a cautious month. The reason is more amount of Nifty futures in the October series are short to guard the portfolio from the position which is rolled from September to October. The second chart, if you simply see, we try to understand where exactly are the traders assuming the Nifty might be. The basic assumption to this chart always is one, this is an open interest chart, and second, we assume that the open interest of the options is more of a seller side and not really a buyer side. So if you see 17,000 as a strike is where we have seen there is good amount of put writing. This is for the monthly 27th October expiry. We are not really looking at the first weekly expiry, which is 6th October. And on the call side, that strike comes to almost at 18,000. So this is not really going to give you a very bright picture, but yes, we still need to understand the sentiment that's happening. So the put selling that happened more in today's market was attributing to the 16,800 to the 17,000 strike. Now, if you see the last 5 days, there are a couple of sectors which has seen good buying, not only in the stock futures, but also cash-based buying. And we believe IT and Pharma, these are the two stocks, irrespective of the correction that happened in the last 5 to 7 days, they have sustained that, and we have seen some money shift from the banking or maybe autos, banking, and most of the other sectors coming to IT and Pharma. So later in the PPT, we have shortlisted almost 4 stocks which we like for October series and which we recommend to be holding both in the cash as well as the stock future position. So if you see on the monthly side, even here we have mentioned that for the Bank Nifty and the Nifty, the range that we expect, because the expiry was closer to 16,800, so the base of the put writing was low. So around 16,200 to around 17,400. Now the important part in the range is the 17,400, where we have the short rolls which has happened into this series. So the 4 stocks that we like Infosys, we like HCL Tech, we like Marico, and we like Sun Pharma. This would be the 4 stocks that we have discussed more in detail into the next slide. Now, this would give us consensus more about what the banking stock or the Bank Nifty might depict for the October series. So again, on the banking side, when we started the September series, the net position that the traders had into September futures was around 20 odd lakhs, which is again seen a surge of almost 2 lakhs. So we are closer to 22 lakhs when we started this day. Mind you, these are the data that we had before the day started, because we are precisely talking about what the expiry has happened, and we are not really included the intraday data. As we go on, we'll be including some information as to what the intraday data has had, and is there any major changes into that. So we believe that somewhere close to 39,500, that is the pivot for the Bank Nifty. where the short rolls have happened, and once we cross or the bank nifty crosses above that, that is when the trend might reverse, and again we might see some money pouring into collective banking stocks or the bank nifty. We are looking at the option side, though the contracts are less, but just to understand where exactly the 27th October has positioning. If you see, the strikes would be 38,000 or almost 40,000. This is where the highest call and put option for this October series is. Now, this is an important slide because this will actually bifurcate where exactly is derivative money coming in. So if you see, these are simply the rollovers, and this is the difference between the previous and the current rollover. So almost more than 4 to 5 sectors we have seen there is a deficit, if I might say that. That means lesser positions have been carried from the September to October, at least in these stocks. Now, on an average, the if you see the sectors have rolled around 92 to 95%, which is a norm which generally happens. But more, though it shows textile as a sector, the stocks are very feeble, but we still feel IT at 95, which also we mentioned that IT and pharma would be the top pick. We feel information technology might be the sector for this October series, at least as of now. And the two stocks, again, we reiterate it would be Infosys and HCL Tech, which can hold the rally at least in this sector. So the highest and the lower side, we had seen good traction in the automobile segment, but as I said, when the market crashed, the sectors which gave the biggest alpha were the one to be sold the most. So banking followed with automobiles is where we had seen some selling that has come in. Now, as I said, we have boiled down to 4 stocks. Now, the view that we have here is generally when the FIs start a contract, the long short ratio is at least, let's say, closer to 40-50% on the long side, and maybe a bit nervous 60% on the short side. That is what we see generally. But this time for the October series, the short positions are way biased. We have almost 85% short positions, which are primarily more into the bank nifty also and the Nifty as well. And only hardly 15% is when we started the long short ratio. So what it says that the major portion of or the majority of the trades, this is specifically for the FI side, they have used Nifty and Bank Nifty futures of the October series to short them and to hedge the portfolios, or even to take a negative bias on the index. Because if you see on an average, the selling in the cash market by FIs is around 2 to 3,000 odd crores, which accentuated to almost 4 to 5,000 crores, I guess, Monday and Tuesday. So that 2 days of rollover, when it happened, we had actually seen a cash-based selling, and needless to say, the bank nifty tanked more than 1,500 odd points. So overall, looking at where the sectors have seen this money, which came out of, let's say, banking and autos and these sectors, we believe again it would be pharma and IT. So in IT, we like Infosys because I guess it is more than last 6 days that the stock has been hovering in the 1360, 1380 odd range, and the last 4 days, precisely from Monday, there was short covering. So we believe that at least the negative or the pessimism in the stock has been faded away, and that too in a time when the market was crashing. So there is a possibility that the stock might be positively biased, or we might see an outperformance. So 13, I guess even today it made a low of close to 1378 to 1380, but we believe that the first hurdle or the resistance for the stock could be somewhere close to 1430, and eventually it can go to around 1460, 1460 as a target. So we have a recommendation of 1440 strike call option for the October end. We still recommend holding on to that, or if the clients have still not bought it, Monday might be a good time to again venture long in that for the so-called underlying target of 1430 to 1460. The second stock in the IT that we like, where we have seen at least in the last 3 days, again the story is more or less the same, short covering in the last 3 days when the market was falling, and we have seen some buying in today's trade as well. So we believe that HCL Tech also has a potential to go to almost 960. So that becomes a good buy with a support base of almost 890 to 900. So that is where we recommend going long in the October series, or you can actually vouch in for a cash-based delivery. Now, there are 2 more stocks wherein I'll hand over this call to Gaurav to give you more details on those stocks. So, Gaurav, please go ahead first.
Thank you, sir. Hello, everyone. I'll be discussing about 2 stocks, and we would go with one.
Sorry.
Okay. And we would go with one long and short approach. First is Kotak Bank. Before talking about Kotak Bank, let's first discuss about Bank Nifty. Nothing different from what Sir has just mentioned. The index declined 3.3 to 4% with rise of 7% open interest, means short formation in Bank Nifty. So now coming to Kotak Bank, the Kotak Bank, the stock never looked strong throughout the series and added 61% in the open interest in September series. And the shorts are rolled with good 97%. Today it has seen a decent pullback, but we have not seen any change in positioning of the stock. So we expect the stock to witness pressure in the October series as well. And one should look for shorting in the stock. We stop at 1900. Second is Sun Pharma. In this corrective phase of markets, we saw Pharma and FMCG holding on. Our pick is from Pharma Pack, and that is Sun Pharma. The stock gained 6% in price with rise of 11.5% in open interest. Rollover seen at 87%, and that is at par with what we have seen in Sun Pharma in previous series. We expect it to trade with positive bias in the range of 885 to 1030. So just to summarize, we carry bearish view on Kotak Bank and we recommend to go long in Sun Farm. Yes, with that I hand the call back to Sir. Thank you.
Yeah, thank you, Gaurav. So, based on this, at least as a strategy, we recommend a bull call spread, but that was we recommended in the morning itself, and the target has been achieved. But still, for traders who would wish to do it on Monday, we have a positional same thing. We can go with the 17,100, and this time with the 17,300 strike, we can go long as a bull call spread. So, guys, the crux of this rollover series mode is that this bounce in the Nifty, which happened from, let's say, 16,800, has weighed still almost 17,400. Once we breach 17,400 on the upside, that is where the necessity of maybe a short covering or majorly a net fresh formation of longs might come in. Now, will that really happen in October? We need to wait and see. But the better strategy here is to go for a bull call spread, because the volatility index is almost at 20-21%. So when you're selling a far after the money option, it takes care, or it lessens the burden of just buying at the money option. So the recommendation here would be to buy a 17,100 call option, and we can go and sell a 17,300 strike call option. So I'll just sum up the basic crux that we have. When we started the September series, the trend was very positive. It was the banking stock which was leading the rally, and the last 10 days of September series, obviously the sectors like autos and banks, they saw profit booking and shorting as well, and the index tumbled. The net expiry to expiry fall in the Nifty was closer to 4%, and the bank Nifty also corrected almost 3.5%. So for the October series, today being a good day, we have seen a good decent bounce of 350 odd points, which was more or less warranted after such a great fall which has happened in both the indices. But the levels above which the bias has to change to a buy on dips would be 39,500 for the bank Nifty. The reason is simple. We have short positions seen into the October series, and the weighted average of those is somewhere close to that level. For the Nifty, that level would be around 17,400. In the last 3 days of expiry, the sectors that have seen money coming in, or at least on the derivative side, some short covering which happened when the market was falling, was IT and Pharma. And in the IT series, we like Infosys and HCL Tech with the levels mentioned. And Pharma, we have Paul on Sun Pharma. We also like Marico on that. So the view that we have here is this is where the Nifty might be now, because this is a month where we'll have the results pouring in. So generally the market takes a breather once it starts sensing how the results come in, but obviously that would be more of the fundamental view. But as of now, we believe after the 6th October, which is this coming Thursday expiry, there is a possibility we might see some range bound action, and the VIX might eventually cool to a 16.5 to 17. So the view that we have on the volatility index is we do not really expect it to inch beyond a 22.5, and it might find a support somewhere close to a 16.5 to 17 as an average. I guess that sums up the basic rollover crux and analysis. So Suraj, you can let me know if there are any queries on that so we can answer them.
Sure, Manoj. We are open for a question and answer. So if you have any questions, request you to type in a Q&A section so that we can address your query. If you have any questions, requested to type in the Q&A section. And in the meanwhile, I'm just putting a poll for you all. Request you to share your valuable feedback in between. We request you all the participants to share your valuable feedback. And in the meanwhile, if you have any questions, request you to type in the Q&A section so that we can address your query. We are going to close the feedback section. Thank you for your valuable feedback. Now we are open for questions and answers. So we have got a question, Manoj, from Mr. Gagan Kaba. What is your view on Nifty for next 3 to 4 months, as it looks very weak on weekly charts?
Right. I appreciate this question. Mr. Gaba, the first thing is, right, it might look weak on the weekly chart, but then I guess the major reason that we have seen a correction in the last 10 days is because of global cues. And obviously, there is no analysis to that. But simply, if I see, if you remember, after the net sale of almost 2 lakhs, 2.2 odd lakhs crore that the FIs have been selling in the Indian market in the last 6-8 months, we saw some buying of 20 to around 25,000 odd crores, which happened in May-June series, post-May-June series. So we believe that this entire equation for, let's say, a bullishness to happen would at least have a support somewhere close to the previous low of 15,400 to 800 that we made. Now, if you're talking about that as a support, that would be certainly 1400 odd point. But the most important part is we need to understand that dollar index has actually gone, if you remember, it was closer to 102, 103, and it is a good 10% up. It's almost 113 and 114. So to equate this, we see that the FIs get more into the selling side from the cash side. And needless to say, the bond market is also on the flip side. So if you have to simply say, what's your view on the Nifty? I feel that there is a possibility that we might not really breach or make a new low from the so-called 15,800, and we might be inching more towards an 18,500 in the next 2 to 3 months. So that would be the view that we have. I'll take the second question from Aman, which asks about
Aman Mala.
Aman Mala, yeah.
So his question is view on auto sectors. Number will be positive.
Right. Numbers, if I understand you properly, you're talking about the auto sales numbers. So that would be a fundamental call. But if I have to simply see the entire sector, when the entire move came, first we saw the auto stocks running, then we saw the auto ancillaries, and then we eventually saw the tire stock running. So if I have to simply say, all the three derivatives of the auto sector saw that money come in, and there was a good move in all the stocks. Simply saying, those stocks which we feel there are fun, and not only fundamental, at least from the derivative side also would be good. Like let's say Tata Motors somewhere close to 384 to 388. That is a level where always it has found a support, and we believe that there is a crux of delivery based buying which has happened in that level. So with that as a base, the stock can go all the way to 420. So that is a good 8 to 9% move on the stock, followed by Hero MotoCorp. So if I have to simply pick the best, I feel at this point of time, it will be Tata Motors and Hero MotoCorp, at least in the auto sectors. Number specific on fundamentals, I guess the fundamental team will be in a better position to answer on that.
Thank you, Manoj, and thank you, Amanji, for asking question. Any other questions apart from this? Anyone wish to ask your question? Request you to type in the Q&A section. So Manoj, I believe there is no more questions.
Okay, so we can call this. We can
Yes,
end.
yes, we can just proceed and
Yeah.
go ahead. So
Thank you
with
so
this
much.
note, I would like to
everybody.
thank you, Manoj, thank you, Gaurav, and thank you all the participants for joining with us. And with this note, I would like to conclude the call. Thank you and have a great day. Take care. See you. Bye-bye. हाँ जी, हो गया?